Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of my channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Everyone, just a reminder from Bookmap, if you you're invited to join Bookmap Discord, whether you have a paid or a free subscription to Bookmap. And if you do, need to verify your account to have access to chat, to be able to chat, as well as watch the streams in Bookmap Discord. So everyone, again, you're encouraged to join Bookmap Discord. If you already are not a Bookmap subscriber, you can subscribe to the free digital version. And again, you will need to verify your account in Bookmap Discord. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks like the Magnificent Seven stocks that I follow and trade, as well as the equity index futures like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the Nasdaq 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And NQ, the NQ futures contract, is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset, and setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Stephen. Welcome. Glad you're here. And thanks for the post in YouTube, posting the link to Bookmap as well as the Bookmap Discord. So again, thank you very much, Stephen. Sorry about that. All right, here's my agenda for today, Friday, September 6th. First of all, I want to go over news items, economic data, and events for today to wrap up the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll get to the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right. Let's start with economic data, news items for today. And of course, I'm sure everyone is aware the jobs report came out at 8:30 a.m. Eastern Time. The number came at a little bit less than forecasted, 142,000 versus 165,000 expected. But it was greater than the previous number and also the revision, which was actually a revision lower for July. All right, so then that was the jobs report. I'll talk more about this statement from Fed member Waller in just a few minutes. All right, this is the S&P 500. This is the reaction to the data at 8:30 a.m. Eastern Time. A little bit of up and down. Price moved up, found resistance at the SPY 551 volatility trigger, and then moved lower and continued to move lower after the cash open. All right, so that's the news item. Again, jobs report came in less than expected. Initial reaction was bullish, and then after the cash open, and I'll show you another clue in just a minute to indicate that price was going to move lower. All right, so that is the news items to wrap up the week. Jobs report, again, less than expected, greater than previous. All right, let's move on to positional analysis now. So this is the S&P 500 futures and Bookmap ES futures, and I just mentioned one level here. This SPY 551 volatility trigger acting as resistance today. There were a couple of other levels acting as resistance earlier today. All right, so that is the high of the day resistance level for the S&P 500. And now, before I take a closer look at this chart, I do want to take a look at a larger time frame. I'm going to go to the SPX, the underlying index. This is the SPX one-day chart in Thinkorswim. I'll go through this quickly, showing a year's worth of data. Big rally last year. Correction began April 1st. Rally resumed the Monday after options expiration. That was April 19th. That was a slightly put-dominated options expiration. Next correction began. Note the rallies are becoming shorter and shorter. Smaller rallies. It looks like potentially larger corrections. So this next correction began July 17th. That was the Wednesday VIX expiration, 2 days before the options expiration. And then the rally resumed on August 5th. After that big weekend drop, the yen carry trade unwind. Let's pick that up now with the 1 hour chart. Thinkorswim 30-day 1 hour chart. August 5th, SPX low 51.19. Rally resumed. Pull back to the 5,200 put wall. Rally continued higher, and then entered a consolidation somewhere between 55.60 and 56.50, right in here. And then Tuesday, this week, SPX broke sharply below that consolidation, the low of the consolidation. That was also the lower weekly expected move. I'll talk about that in just a minute. and then has now moved down close to the 5,400 put wall. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market, based on the closing price for SPX from last week, last Friday. And SPX, again, broke below that level on Tuesday and has continued to trade below the lower weekly expected move. And then the dashed blue lines are showing the lower and upper daily expected move. Also based on the options market, based on the closing price for SPX from yesterday. And note SPX is trading below that lower daily expected move as well. And I do post those levels in Discord every day the evening before. All right, so those are the expected moves. And again, SPX trading below the lower daily expected move and the lower weekly expected move. All right, the dark red lines in the chart are showing spot gamma levels. These are based on gamma-weighted open interest. They're provided to spot gamma subscribers, available on a variety of trading platforms. I'm going to point out the key daily levels. First of all, 5,400 is the put wall. That's the strike with largest net negative gamma that can be expected to act as support. So far today, doing its job. And note that level did move down from yesterday, so that is kind of key for today, that potential floor for price moved down from 5,500 to 5,400 a day. Otherwise, all the other key daily levels for SPX were unchanged. So the next level up is 5,500. Right there. That's a strike with the largest absolute positive and negative gamma. That's the absolute gamma strike. That level remains unchanged. And above that is the volatility trigger at 5550. That is spot gamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. I'll talk more about that in a few minutes. SPX is trading firmly in a negative gamma environment today. Very negative gamma. Market makers definitely trading with price down and up. And then finally, the call wall remains at 5750. Well out of play. That's a strike with large net positive gamma that can be expected to act as resistance. All right, so again, the only key daily level for SPX that changed was the put wall that moved down from 5,500 to 5,400, and that is key for today. And that was definitely bearish. All right, that is SPX 1 hour chart. Let's wrap up our view of SPX with a 1 minute chart just to take a closer look at the levels in play for today. So this is a 1 minute chart. I'll zoom in just a moment. Just wanted to show that break of consolidation on Tuesday. Kind of a similar price action today, downtrend all day. All right, let's zoom into today now. So price continues to move lower from that move on Tuesday. So the volatility trigger is up above at 5550. Here's the lower daily expected move, absolute gamma strike at 5500. That has been a key risk off, risk on level. And then, of course, here's the put wall right at 5400. SPX did bounce, and that was the SPY 540 put wall just above that, helping to provide support as well. So one question today is, will SPX move all the way down to the 5400 put wall? All right, so that's a 1 minute chart. Now let's move on to Bookmap. So in Bookmap, I have my own cloud notes, so I can show SPX levels. And you can't see it here. There's a combo level just below 5,400. That's 53.99, combo 1 level, very important level. And the 5,400 level put wall just above that. That is an SPX level that I'm showing in my cloud notes. And note there is a difference in price between ES and SPX. And today it is about 9 points. And note that number continues to move smaller as the contract expiration approaches, rollover approaches. All right, so that ES to SPX difference, 9 points today. So I'm showing SPX 5,400, the 5,400 put wall at ES 5409. And there's another important SPX level here. You can't see the label because of the combo level just below that. That's the 5,500 absolute gamma strike. And that was another third entry point for short this morning after the cash open. And again, I also have SPY levels on this chart. And I pay close attention to how price reacts at the volatility triggers. Yesterday, I posted a short setup for ES as price reversed just below the 55.50 volatility trigger yesterday. All right, so those are the levels in play for today. And also here's the SPY 540 put wall just above the 5,400 put wall, helping to provide support as well. All right, so both put walls very close together. So far providing support today, doing their job, acting as support. We'll talk more about setups in a few minutes. All right, let's move on. Let's take a look at Nasdaq now. This is the NQ futures and Bookmap. Let's take a quick look at the underlying index charts. First of all, QQQ. So QQQ. Just a quick reminder again, SPY, SPX, put wall, move lower, one shift lower. And for SPY, the volatility trigger also shifted lower. And that was the resistance high of the day for the cash open. All right, for QQQ, the volatility trigger and absolute gamma strike move lower, down to 460. That was around the high of the day. That was resistance. So just like SPY, price found resistance at the volatility trigger. So QQQ, volatility trigger resistance. And for the SP 500 SPY, 551 volatility trigger, also resistance. All right, so for QQQ, volatility trigger, put wall, absolute gamma strike, moved down to 460. Put wall moved up to 460, so that put wall is actually was acting as resistance. So QQQ is trading well below its put wall, and then the call wall moved up to 485. Definitely not in play for today. So over a 10-point range in QQQ today, and note that 450 is a large gamma 4 level. That did act as support earlier today. A little bit of clustering around that level, up and down around that level. Now maybe these two levels, that's a combo level just above that, acting as resistance. And let's take a look at NDX, then we'll get back to NQ. All right, NDX, just around that just around that 460 volatility trigger. There are a couple levels for NDX as well. There's this combo 3 level and 0 gamma level, also acting as resistance. And note the NDX 18,500 put wall also in play for today. Now it looks like it's acting as resistance. All right, let's go back to NQ. All right, so again, I have my own cloud notes here in NQ, so I can show QQQ levels, NDX levels. Remember, I mentioned a cluster of levels. There were 2 QQQ levels and 2 NDX levels, and most important, the QQQ 460 volatility trigger acting as resistance. That was just after the cash open. These levels, this cluster of levels acting as resistance. And now down to the QQQ 450 level, and that combo level just above that now looks like that's acting as resistance. All right, so those are the levels in play for Nasdaq. I'll talk about setups in just a few minutes. All right, in just a couple of minutes. So let's wrap up positional analysis by taking a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. This is the data table at the bottom of the Spotgamma AM Founders Note. This is gamma notional, market maker's position on the gamma curve at the beginning of the day. And this gives me an idea of what type of volatility to expect for the day. In a negative gamma environment, I'm looking for a more trending market, market makers trading with price, wider trading ranges. In a positive gamma environment, I would be looking for more mean reverting price action, traders selling rips and buying dips. This is definitely a negative gamma trending market environment. This is gamma notional, market makers position on the gamma curve at the beginning of the day for the S&P 500 and Nasdaq. In a negative gamma environment, this indicates traders are long puts, market makers are short puts. Hence the negative gamma. They have to trade again with price to hedge their delta exposure. And if I certainly expect gamma notional to be much more negative on Monday after this large move down today. All right, these numbers all negative, and with the exception of NDX, which is really not significant. All these numbers did move lower from yesterday. All right, so let's take a look at the consequence of that negative gamma now. I'm going to look at the Vanna model for SPX. What this chart is showing is market makers delta notional on the vertical axis and spot price for SPX on the horizontal axis. There are 2 curves on this chart. The light gray curve is showing how delta notional, market makers delta notional, may change with changes in price only. And the purple curve adds implied volatility to the equation. That shows how market makers delta notional may change with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Vanna effect. Note Spotgamma does have a video on YouTube about Vanna and Charm. Well worth taking a look. That's a free video on the Spotgamma channel on YouTube. And you can see how if price moves lower, implied volatility increases. That will increase market makers delta notional, and they will have to hedge more aggressively by selling futures. All right, so let's take a look at the purple curve. So the high of the day for SPX was right about here, 55.21, somewhere between these 2 lines. Low of the day so far, right around 54.04, just above the put wall, somewhere around here. So its price has dropped. Implied volatility increases. Market makers delta notional increases. And they have to sell futures to hedge their delta exposure. And that's the only way they can hedge SPX. And if price does rally, implied volatility drops, price increases, market makers can buy back their short futures, and that is a put Vanna rally. So again, this works both ways. Market makers trading with price in a negative gamma environment, helping to enhance or increase volatility. All right, so based on this, my thesis for the day was looking for higher volatility. And then, of course, the order flow and hedging flow, watching the order flow and hedging flow today and reactions at key levels based on the jobs report. That was the, it's hard to develop a thesis when they're from the data from the previous day when there's such an important data release coming out in the morning. All right, so let's move on now to execution. So everything that we've looked at so far, other than Bookmap, is based on static data, those levels on the charts, based on static data. Now I'm moving on to execution, moving on to real-time data. I'm going to start with the S&P 500. Also start with by taking a look at what options traders are doing today. So this is the hero signal, hedging impact real-time options. So this is showing what options traders and market makers are doing in the S&P 500 index products. So what this chart is showing is a combined signal of SPX, SPY, XSP, and ES futures, options trades, and market maker hedging activity. All right, and I am intentionally showing data extended hours. I'll turn that off in just a minute. All right, so again, this is the hero signal, hedging impact real-time options, showing options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. This is the index signal. And a falling hero, so there are two lines on this chart, first of all. The white line is price for SPX. The purple line is the hero signal. And a falling purple line, falling hero signal, indicates traders are taking negative delta options positions. And a rising hero signal indicates traders are taking positive delta positions. They're buying calls and or selling puts. Note the turnaround around 11 a.m. And I will get back to this signal in just a minute. Let's go to the other signal that we can take a look at for the S&P 500. This is the equity signal. What this chart is showing is options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. And this is notably bearish. It has been continuously bearish all day, maybe leveling off around 1 o'clock as prices move down to that SPY 540 put wall and the SPX 5400 put wall. All right, let's go back to the index signal now. And I'm going to go to full screen. Go back to the index signal. All right, so again, remember this is a combined signal of SPX, SPY, XSP, and ES futures. And note that options for SPX and ES futures do trade before the cash open. All right, so let's zoom in on this now. And I want to talk about let's go to, let me zoom in just a little bit more. All right, so it becomes more clear. I'm looking at data from pretty much 8:30 a.m. Eastern Time to just before 9:30. So note, as price was rising, as traders were buying futures, after the data release, options traders really weren't buying it. Hero signal was flat. Then starting just after 9 a.m., options traders were fading that. They were taking negative delta positions. So that was one clue that options traders again were not buying this. They weren't on board with the bullish price action and futures. All right, so now let me turn off extended trading hours. So we'll just go from the cash open. All right, so again, first clue, options traders, even before the cash open, taking negative delta positions. All right, then now I've just set the opening price here at the cash open, 9:30 a.m. Eastern Time. Pretty much the same idea. Hero signal falling as price was rising the first few minutes after the cash open up to that 551 volatility trigger. And as price reached that level, options traders started taking negative delta positions. Price moved lower. And note, just before 11 a.m., looks like they've started taking positive delta positions again as price was approaching that put wall at 5,400 and the SPY put wall just above that. All right, that's the index signal. Let's shift to puts and calls so we can get a little bit more clear view of what traders are doing. So the orange line is showing calls. A falling orange line indicates traders are buying calls, and a falling blue line indicates traders are buying puts. Sorry about that. So again, falling orange line, traders selling calls. Falling blue line, traders buying puts. That was going on until just after 10:50. Then traders started selling puts as, again, price approached that put wall, started buying calls. That continues in the index. All right, so it looks like the effect of this in the index signal was to push price lower up until about 10:50, and then to help stabilize the price just around those put walls. All right, this is the other signal that we can take a look at for the S&P 500. Let me close full screen so we can. So again, that is the aggregate signal of all 500 stocks in the S&P 500 index. Again, this has been very noticeably bearish all day. Traders selling calls, buying puts. Market makers take the opposite side of those trades. They have to sell stock to hedge their delta exposure, and that tends to drive the index lower. Now it looks like the put buyers have taken the foot off the gas as prices approach that put wall. And then just before 1 p.m., stop selling calls. Price stabilizing again. All right, so what it looks like in the index signal here is that traders may be monetizing their puts, maybe taking profits on their puts as they're selling their puts, or just taking advantage of high volatility and lower prices to sell puts. All right, let's go to Bookmap now. I'm going to zoom in. And I'm on Nasdaq. Sorry about that. Let's go to ES. All right, let's try that again. Zoom in. All right, so I'm showing ES starting about 8:30. Traders were buying futures. The volume dots of Bookmap show market buy minus sell. You can see magenta dots indicate more sellers than buyers. Sellers exhausted there. Buyers come in, that's shown by the green volume dots, more buyers than sellers. And just after the cash open. So we know already that traders were taking negative delta options positions in SPX and ES futures. Price reaches volatility trigger. These levels, volatility triggers can often act as support and resistance. Certainly this week, acting more as resistance. Price reverses lower as options traders started taking negative delta positions in the index as well as the equity signal. And a Bookmap, again, you can see magenta volume dots, a lot of sellers coming in. Entry points, initial entry point at 551 for that first reversal. Second entry point, second pullback at 550 absolute gamma strike. And the third entry point at the 5500 absolute gamma strike. Let's take a look at the clues in Bookmap here. First of all, cumulative volume delta shown by the dark blue line that changes to magenta as it turns from positive to negative. That's falling. Also, the yellow line, falling yellow line indicates sell stop orders, helping to fuel that move lower. All right, Hector is asking about iceberg orders. And I've discussed this many times. This is pretty typical behavior. Large traders use iceberg orders to hide their size. That's shown by the rising light blue line on the subchart, as well as the rising, the on-chart indicator. So what this is showing here, that may be difficult to read. So this is showing 6,506 buy orders. Large traders using iceberg orders to hide their size. Those are buy orders. 65 different executions. So on this zoom level, Bookmap is aggregating all those iceberg orders into one on-chart indicator. 6,500 contracts, 65 executions. This is very typical behavior of large traders with iceberg orders. They often will buy weakness and sell strength. So this is very typical behavior of iceberg orders. And it is generally not a factor in my trading decision, knowing that behavior of buying weakness and selling strength of iceberg orders. I'm more looking at just order flow as well as hedging flow for my decisions. All right, so that is the SP 500. Clues pre-market and then reactions at key levels, as well as very bearish hedging flow, bearish order flow. And note this little bump up right here. That was that comment that I showed. Here, let's go back to that comment that I showed from Fed member Waller right here. He made several comments. And all that turned out to be was another selling opportunity at 545 here. All right, that's the S&P 500. Let's move on to Nasdaq. All right, for Nasdaq, similar pattern. Move up after the data release up to resistance levels. Price moves lower after the cash open. Let's see what options traders are doing. All right, just like the S&P 500, there are two signals that we can take a look at. First, the index signal. This is showing options trades and market maker hedging activity for a combined signal of NDX and QQQ. And typically these index signals are a little bit more noisy than the equity signal. So here's the equity signal that we can use for Nasdaq, the Mag 7. What this is showing is options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. And essentially this S&P 500 equity signal is the Mag 7 plus 493. And you can see this is very similar to you could say the equity signal is similar to the Mag 7 signal. Traders buying puts and selling calls all day. All right, that's the signal that we'll use for Nasdaq. That's typically this is the signal that I use for Nasdaq. So again, traders selling calls, buying puts. Looks like the put buyers have finally taken their foot off the gas just before 1 p.m. Looks like the call sellers were going to do the same. Start buying a few calls. Now they're selling calls again. All right, let's go take a look at Bookmap. Bookmap again. Aggressive buyers, you can see the green volume dots before the cash open, then just after the cash open. Aggressive sellers come in, price meets resistance at the 460 volatility trigger. Aggressive sellers, again, magenta volume dots coming in. Falling cumulative volume delta. Sell stop orders help to fuel the move lower. And just like the S&P 500, large traders fading the move with iceberg orders. So they're buying weakness. All right, that is the Nasdaq. Now let's take a look at some stocks. First stock I want to take a look at is Apple. Any questions about the S&P 500 and Nasdaq? Very bearish day. No indication ever to get long in the Nasdaq or the S&P 500. All right, here's Apple. Note 225 is the key gamma strike. Acted as resistance. All right, let's take a look and see what options traders are doing. Let's go to Apple. All right, for the first few minutes, the rising orange line indicates traders are buying calls, and they took their foot off the gas very quickly as price reached that 225 key gamma strike. For the first few minutes, they were also selling puts, and then price reversed lower as traders started buying puts and stopped buying calls, started selling calls. Price moved lower. So starting just at, let's say, around 9:45, orange line moving down, blue line moving down, very powerful directional indicator. Market makers have to, they take the opposite side of those trades, and they have to sell stock to hedge their delta exposure. So note again, the hedging flow reverses as price reaches the 225 key gamma strike, and Apple moves lower. All right, that's Apple again, 225 key gamma strike resistance. Price moves lower. In the subchart here, I have the market pulse price change indicator that's shown by this kind of oscillating indicator. And I use the extremes to help highlight deeper pullbacks for short entries in a downtrend. Or in an uptrend, I would use the lower extremes, the red. All right, that's Apple. Next stock, let's take a look at Amazon. And Stephen asked, do iceberg orders show on the volume profile? It wouldn't, right? I don't think so. So the other than the tip of the iceberg, those would be the limit orders. And actually the executions would, if volume profile is showing volume executed, yeah, they would, I think. But they would not show up in the order book, but they should show on the volume profile. All right, here's Amazon. 172.50 is the hedge wall. Price finding support around that level. All right, let's go. Let's see what options traders are doing in Amazon. All right, so falling orange line, traders selling calls. Looks like they're also selling puts, but it looks like call sellers definitely driving price in Amazon, so they're taking advantage of volatility and selling strangles there. Selling calls and buying puts, that's shown by the positive notional value for the blue line and negative notional value for the orange line. Again, call sellers really driving price. In Amazon, finding support around the 172.50 hedge wall. Let's go back to Bookmap. Oops. And you can see all the magenta volume dots. Oops, wrong. That's the opening print. Aggressive sellers come in, price moves below VWAP. Market pulse price change extremes, helping to mark the deeper pullbacks for short entry. And I've noted the 172.50 hedge wall with that dash white line. All right, next stock I want to take a look at is Meta. Well, I need to add more lines to Meta. Now it's down below 500. And let's go take a look at Hero again to see what options traders have been doing in Meta. Zoom in a bit. Pretty choppy Hero signal here. Up and down, but generally down, especially for the call line. And they, up until about 11:30, they've been selling puts. So selling calls, selling puts. Zoom out all the way. So net for the day, the put line is pretty flat. Call line still moving lower. Traders selling calls. 520 key gamma strike, 515 hedge wall. Note all the magenta volume dots. So in addition to call sellers, aggressive sellers are driving price lower. Actually, let me zoom out just a little bit more. All right, so 520 key gamma strike. Pull back to the level, good entry point for a short. There's the 515 hedge wall. A little bit of consolidation at that level, but then another entry point for a short. Now price breaking below 500. Whoops. Didn't mean to do that. Sorry about that. Back to hero. Now the put wall is all the way down at 485. So price could move down to that level. All right, here's NVIDIA. A little bit of a choppy hero signal, but traders selling calls and buying puts. 100 is the put wall. 108 is the hedge wall. Hedge wall resistance just after the cash open. Let's go to NVIDIA. $108 hedge wall, opening print just below that level. And looks like price has finally found support right around 101, just above the 100 put wall. Traders selling calls, buying puts. Note the magenta volume dots, a lot of aggressive sellers. Falling cumulative volume delta. Market pulse price change indicator, helping to identify the deeper pullbacks for short entry. All right, so that's NVIDIA. Last stock I want to take a look at is Tesla. Tesla's been strong this week, not so much today. All right, Tesla 230 is the call wall, key gamma strike. And price broke below that. Let's see what options traders are doing in Tesla. Traders selling calls and buying puts. Looks like call sellers really driving price. Price sliced right through the call wall, key gamma strike. Also the 220 hedge wall. A lot of magenta volume dots there. Steadily falling cumulative volume delta. All right, that's Tesla. All right, any questions about any of the stocks? Does anyone have any stocks they want me to take a look at? Please let me know. I'll be glad to do that. All right, there have been a couple of questions. Let's shift over to Tesla. A couple of questions about in the money, out of the money. What I want to do is take a look at an options chain. So this is an options chain for Tesla. This is the upcoming monthly options expiration, the September expiration. Calls on the left, puts on the right. And the shaded portions for each are the options that are out of the money and the lighter portion in the money. All right, so again, let's take a look at the calls. This is out of the money. That's above the current price, and in the money below the current price. Note the price of these options. Out of the money, the only value is the time value, the extrinsic value. So note here the extrinsic value is somewhere between the bid and the ask. So that's the total value of that option, and as expiration approaches, that will go to 0. And note also delta. Deep in the money, delta is almost 1, and way out of the money, that's almost 0. And then at expiration, all of the out of the money deltas will be 0, and all the in the money deltas will be 1. That's at expiration. And we can actually see that here. Go to today's expiration. So you can see that today, the in the monies, close to 1, out of the monies, close to 0. All right, so that's in the money, out of the money. All right, there was another question about what happens with a call wall breach. So we know for Tesla, the 230 is the call wall. That's the strike with largest net positive gamma for an index. And that would not be the case for, that's basically for a stock. That's where most of the calls are concentrated. So for a stock, Spotgamma assumes that traders are long calls, market makers are short calls. And as price, let's say price moves up above 130, moves up to 250. So moves up 20 points. So note that delta right now at 230 is 0.27. That would be, if price approach that level, it would be closer to 50. So let's say price moves from 230 to 250. So we know we can look at so that's around on 215. So we can take a look at 195. Which is a delta of around 80. So as price moves up, market makers, which are short those calls, their delta would increase from 50 to 80. So their delta exposure is increasing. Remember, market makers want to remain delta neutral. So they would have to continue to sell futures to hedge their delta exposure as price breaches that call wall and moves up above that level. All right, so I hope that answers any questions about in the money, out of the money, and what happens with a call wall breach. All right, let's take a look. Let's go back to indexes now. Unless anybody has any questions or stocks they want me to take a look at. And it looks like S&P 500 now is actually approaching that 5,400 put wall. Not quite there. Trading somewhere between the 5,400 put wall for SPX and the 540 put wall for SPY. Let's go back and see what options traders are doing. Go back to the equity signal. Continues to be bearish. Zoom in on that. Traders continue to sell calls, which I find kind of amazing. They would sell calls down at these low levels, but that's what they're doing. Continue to sell calls. And the equity signal, remember about 1045, looked like they started monetizing their puts, or selling puts, taking advantage of the high volatility. Also buying calls. Now that activity has stopped, and it looks like the put line maybe just making a series of higher lows and higher highs. But it really looks like the equities are having a little bit stronger influence today. Let's go back to Bookmap. Do a quick check on Nasdaq. All right, let me do a quick check on Spotgamma levels for Nasdaq. Oops. See what there is below current. All right, so for QQQ, there is a combo level at 440.39 and then 440 large gamma 3. So for QQQ, spot gamma levels well down below at 440. And again, QQQ trading well below its volatility trigger and put wall at 460. NDX currently trading right around 18,400. So not much below for NDX as well to provide any support. All right, last call for stocks or questions. All right, everyone, I'm going to wrap it up. I want to thank you very much for watching. Everyone have a great weekend, and I will see you on Monday. Thanks again. Bye.